The market tries to break down and fails, then the bulls rip it higher. Are they ready to break out? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that Tuesday's high and low would be very important for which way the market was going to go. On Wednesday morning, they attacked Tuesday's low, were unable to break through, and the bulls ripped it higher the rest of the day, closing near Tuesday's high. Now the question is, are the bulls ready to break out? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we are going to check out our indicator, as we always do, and we're going to go through our Trade Waves Academy, the newest course we just released, as we have a screaming deal on that right now. So let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute SPY chart, and this is what we use for day trading. This is also incredible for swing trading. I've gone through Amazon and Bitcoin and Netflix and NVIDIA and Meta, you name it. We've gone through it, and it's absolutely killed on swing trades as well. And if you're new here, we built a custom indicator that works in TradingView. It is called IWJ Pivot Point Pro. You can see it right here. We turn it off and on. You can see the buy and sell signals come back on and turn off. And this indicator is giving you price action trading, looking forward and giving you tops and bottoms and absolutely crushing it. So what you're looking at here is my TradingView chart. On the left in yellow is pre-market, on the right in blue is post-market. We do need these on for the indicator to work properly. However, we do not trade pre or post-market. You also need real-time data for the ES and NQ for the indicator to work properly, as it does monitor those charts because it wants to have everything in sync when we get in a trade, because the markets moving in the same direction create momentum, which leads to a much higher likelihood of a winning trade. So today was actually a very, very slow start, very choppy day back and forth. We had some buy signals here that didn't work out, and then you had a move down, and right here at 8:45 you got on the exact low a buy signal, and it went from 573 all the way up to 580, a 7-point rip straight higher. This trade absolutely crushed. It took care of any losses you may have had here. So if you had this trade, you were absolutely super excited about that. And that was the day. That one trade made the whole day and absolutely killed it. So you caught the bottom, you caught this rocket ride higher, and you had an incredible day if you had the indicator. So again, slow start, losing trades here. That's going to happen. You're going to have losing trades no matter what system or trading style you use. But the key is to catch the big ones, and that's what the indicator does. Now, we don't trade after 10 a.m. Pacific Standard Time because that's the second half of the day and the market slows down, volume diminishes, and you get a lot of choppy behavior. So we don't trade that time frame. So that would have been the last trade of the day. But you can see it's absolutely killing it. It's helping hundreds of traders absolutely kill the market. You can see on the screen what people are saying. And actually, we went through the first 2 months of contracts. I had one of my members post the results, and we're on pace for $120,000 this year, trading 25 contracts at a time. That is absolutely insane, guys. So if you want to get this indicator, I want you to have it. If you want to get it, there's a link down in the description. Click that link. It will take you to our website. Once you're there, you're going to be on our membership plans area. We have our monthly rooms, but if you scroll down just a little bit further, you're going to see Trading View Indicators. It's $59 a month or $590 for the year. You do get 2 free months if you get the yearly plan. And both of them come with a 30-day money-back guarantee. And the reason for that is I know it's awesome, and I know it's going to help you, and I know you're going to want to have it. Guys, it's killing the market. These traders can't get enough of it. I want you to have it. Now, while we're in here, I do want to talk about our newest course. It's called Trade Waves Academy. And I'm going to scroll down a little further here. It's 10 2-hour modules. You can get them all for $497. Or if you just want to buy a single module, maybe you just want to learn about price action trading or something like that, you can buy it for $67. It's 10 2-hour modules. These modules down here tell you what is in the course. So you see each one of them and what is in the module. But if you do go for the whole course, I want to make it worth your while. I want you to be happy, and I want you to get value out of that. So you're going to get all 10 of those modules. You're also going to get the Elliott Wave 4 beginners course for free included in this $497. So that's a $67 value. You're going to get the advanced Elliott Wave course for free. That's a $147 value. And you're going to get 1 month of the indicator free, because if you're going to try all this stuff out, you might as well have the best tool out there with it. So I'll give it to you for 30 days so you can test it out. And then if you want to keep it after that, that's up to you. That's another $60 in value. Guys, that's almost $300 in value for a $500 product. $300 in additional value for a $500 product. So I really want you to check it out, guys. It's an incredible course. You can see on the screen here, Ira today made $5,200 using what he learned in TradeWaves Academy, along with the indicator, along with my room. These things are absolutely incredible tools. We help people beat the market and make money, and I want to help you too. So check all of these things out, guys. I really want you to be a part of our team. Now let's jump into the chart and take a look. Okay, guys, so here we are on the 2-hour futures chart for the S&P 500. And I've been talking about this for a while, but back in November, we broke out to the upside. So we created a low here that held. You see across here, they broke out above it, came back and back tested it, broke out above it, came back and back tested it, and then broke out, made a higher low. And then they've been unable to either break this low or this high until yesterday. Now they poked down below it, then came back up into the range, and yesterday they did break down again. They failed to break the low and came back up again. So what this can be is it can be a failed breakdown out of the range. And when you get a failed breakdown out of the range, you very often see the bulls take it back to the top of the range at a minimum, and I do believe they would squeeze on out of the top towards that 6,300 area overall. So you'd have a fake down here into the blue box that we've been talking about for support, and then you'd be back above the range, above the key levels, and I'll tell you where that breakout level is in just a minute. And it would be looking like a failed breakdown that would take us back to the top of the range and ultimately into 6,300. Now, how does that play out? Well, first, the bulls do have to get above yesterday's high, and really 58.80 is the number. There's a lot of consolidation there before the breakdown. If the bulls can push through that, they will squeeze, and they'll likely squeeze up into this 59.90 to 6,000 region. Right here is a lot of resistance. And how we would look for this to happen is you'd look for an A, B, C for A, then you'd look for a B wave, and then that breakout through this consolidation here at the top towards 62 to 6,300 overall. Now, the reason we would be looking for an ABC to the upside is this is a wave 4 down here. So we would look at this as wave 3 and then a bigger ABC for 4 and then an ABC for 5, because we are dealing in diagonals. We knew that back here we've been dealing in a diagonal for a while. So you would expect wave 4 to get into wave 1 territory, which it did. And now you would expect it to try to find a bottom and rocket higher, and it's trying to do that. Now, does that mean they're definitely going higher? It doesn't. They haven't broke out over the key levels yet. And as long as the bulls can hold this 58.76 area and keep it under the 618, we can still see them push down here. And the next target down would be between 56.93 and 56.37 with an ultimate target of around 5,600 overall. So they could dive just below our blue box. But as long as they stay above the 55.46 area, actually it's going to be 55.27, excuse me, this wave 2 low right here. As long as they're above that, this is a valid wave 4 possibility, and we would still look higher from the bulls. Now, if they do break this wave 4, again, I talked about this in yesterday's video, but it would be a bigger wave 4. In other words, this Roman numeral 4 down here would move over, and this Roman numeral 3 would move up, and this would be a bigger wave 4 where we'd be looking for 5 higher, unless, of course, they break the April lows. If they break the April lows, that's when I will tell you that that's a change of character in the market. We have seen likely the top at that time, and we will likely see some selling once they're under that level. So bulls are still in control. They have plenty of room below them to hold support in a couple different ways. They are taking on a little bit of water. There is a little bit of warning out there, but again, this isn't the top you would like to see from a major market top. This is very often, we'll call it a fake out top, but a top where they come up, they fight for it, they come down, and then your ABC is a very fast spike and a very fast reversal that gives you a true high that they sell and doesn't look back. We are in a major diagonal. You would expect really strong selling off of the high, and we really haven't gotten that. You've gotten some selling, but I'm talking about selling that doesn't hit support and kind of waffle and then go back up. Off of the high on ES, you have all of this choppy action, And this is just not what diagonals look like when they end. You would expect to see a very, very sharp move to the downside. So as of right now, the bulls are still in control of the market, but again, we can see lower before we see a turn up. The key level for the bulls to break at first is 58.80. Then they're going to need to get through this 6,000 area. Over on the NASDAQ, now the NASDAQ does have a lot more room above its wave 2. It can stop anywhere above that wave 2 and still be a valid wave 4, but it does not have as much room between wave 2 and the April lows or August lows. They're basically the same thing on the NASDAQ, and that is the key area to watch. So if they do break this wave 2, that is a major warning to the bulls that they better hold the August lows or the game is likely over for them. Right now, still plenty of room for this wave 4 to play out. They need to push back over this 20,730 area. If they can do that, they're likely to squeeze to 21,115. And then we'll look for them to squeeze back up into this 21.8 area or so. Again, this would be an A, B, C up, then a B wave, then a C wave, looking for 23,000 plus. Now, what I didn't mention on the ES, but is true as well on both charts, is when you have a range, very often the breakout or breakdown is equal to the size of the range. And right here, you have about a 2,000 point range. So I do think it is possible we could overshoot 23,000 into 24,000 if the bulls are able to break out. And then to the downside, I think we could overshoot into this 18,000 area and the April lows, and then it will be a very, very critical time for the bulls to hold. So again, right now, wave 4, perfectly valid as long as it's above this wave 2 around 18,880. As long as they're above that, they get below that, they better hold the August lows, or otherwise we're looking at a major meltdown in the market. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with our 7-day free trial. That's because I want you to get in there. Make sure you love it. Become part of the trading team. And make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material. We have our Trade Waves Academy, which we talked about earlier, where you do get the free Elliott Wave course. You do get the free advanced course. You do get the free indicator for a month. That one we have as well. But we also have how to learn Elliott Wave through our beginners and advanced courses. In our beginners course, we go through the basics. In our advanced course, we're actually going through many of the things you see right now. So we're going through advanced fib levels. We're going through diagonals. And we're going through how to trade Elliott Wave. We also go through double and triple threes, flats, and triangles. This trading Elliott Wave, again, I say it all the time, is worth the price of admission. Teaches you how to find setups. We were actually long 2 days ago, and that long is absolutely killing right now. How did we know that? We had a setup, and this teaches you those setups. Now, if this is too advanced or you're just getting started, we do have that beginner's course that we talked about. And in there, we're teaching real traders how to make real money and finally understand a market in the way that makes sense. It can be so confusing when good news makes the market go down and bad news makes the market go up. And that's because Elliott knew that the news didn't matter long ago. The news is simply a catalyst, and it can make the market move, but the tone of the news doesn't matter, which is to say good doesn't mean up and bad doesn't mean down. So that makes it pretty much useless. But if you know where the key levels are, you have a huge advantage over other traders. In this course, you get 25 videos where we go through 3 parts. We go through your introduction. We introduce you to Elliott Wave, your mindset and emotion, all that kind of stuff. We give you chart setup and tools where we go through every tool we use with Elliott Wave, how to use it and why. We go through the Elliott Wave for beginners area. And in there, we go through all the waves, how to find key levels. We go through the theory of alternation. Then we go through the corrective depth theory, the pivot, all the things you need to know to understand an incredibly irrational market. Now, the cool thing about these courses is if you want to get them at a discount, you can get our bundle pack and get them for $177. If you want to get them for free, you can get our Trade Waves Academy and get them for $497, including the Academy, including the indicator. But if you want to get them for free and have to pay just a low price, simply join one of our monthly rooms, as they are included in these prices. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through all of the charts, answer all of your questions on the charts, go through the Mag 7, go through the gold, make sure you understand where we're at, and make sure that you are comfortable where your stocks are. That call alone to me is worth the price of admission, but on top of that, you get the beginner's course. You get the advanced course. We trade the SPY and the QQQ, and we swing in day trades. We do trade quite often in my room, but if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as futures trading, individual stocks, income trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures that trade that's so unique. Something you really have to see to understand, and that's one of those reasons we give you the 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. Very similar to yesterday. They got to get through 58.80. Assuming they can get through 58.80, we would look for them to break out to the upside, start to squeeze, and look toward that 6,000 area. And overall, we would look for them to start building a structure back towards 6,300. However, if they cannot get through 58.80 and they melt down below Tuesday's low, then we would be looking at the 5,600 area next. Over on the NASDAQ. On the NASDAQ, we're looking at this as a wave 4 as long as they can hold above this low at 18,881 or so. Right now, they did hold Tuesday's low, and if they can break back over that 20,730 level, we can see them push and press back to the 21,100 area and ultimately up into this 21.8 area before a pullback and then a breakout towards 23 to 24,000. If they are able to break down this low, they need to hold above this wave 2 low or risk challenging or breaking the August and April lows, which would be a major, major problem for the bulls. Guys, that is your market update for today. I'll talk to you tomorrow.